Market Outlook. Calendar. Week 42. The previous week ended with a break that caught the already nervous digital asset market on the wrong foot. Late on Friday evening, momentum flipped within minutes, from wait and see to panicky. The trigger was an escalation in trade policy. China expanded export controls on critical raw materials, while the United States signaled markedly stricter tariff lines. This combination hits keynotes of global value creation, reduces the predictability of cash flows, and raises the risk premium. In thin order books, spreads jumped, leveraged positions were forcibly unwound, and the downward impulse intensified via derivative chains. The price drop was narrative-driven. Headlines dominated rather than individual data releases. By the end of the week, sentiment slid into extreme fear. The crypto fear and greed index fell to around 24,100, while Bitcoin dominance held near 59%. Both indicate a preference for core beta and liquidity, typical when macro overrides micro. Bitcoin sets the pace. Ethereum follows with higher sensitivity, and altcoins show the larger swings in both directions. What matters is the overarching narrative of trade policy, interest rates, and global demand. The coming week's calendar is not overloaded, but it may prove effective. On Tuesday, the ZW economic expectations for Germany and the euro area provide a condensed snapshot of market mood. A positive drift can briefly lift risk appetite. A setback prolongs defensive positioning. On Wednesday comes the Fed's beige book with anecdotal reports from US districts. What matters is the structure from which expectations for the rate and liquidity path are derived. US retail sales are scheduled for Thursday. Whether the release arrives on time remains open. If it does, it will test consumer resilience and valuation premia given the tariff and supply chain backdrop. Into the weekend, the focus shifts to Asia. China releases third quarter GDP together with activity data. Surprises can trigger noticeable repricing impulses already during the Asian session. On the crypto events side, a token unlock at Wormhole is slated for mid-week. Such supply impulses are not trend-defining by themselves, but with narrow market breadth they can temporarily raise volatility. The background noise remains elevated. Policy sets the frame, data provide the timing. Headline-driven spikes are more likely than trends. The reaction pattern matters more. For Bitcoin, a persistently high dominance favors capital allocation into liquid segments. As long as the rebuilding of confidence is fragile, risk is deployed selectively. ETH shows the larger swings. Altcoins remain the most sensitive barometer of risk appetite. They benefit most when signs of easing appear, yet they take the first hit when fresh tariff or export headlines harden the bigger picture. Clear criteria, defined position sizes, strict stops, and a robust error culture are essential. Time windows around data are actively managed. Sometimes the best decision is to do nothing. Our results and strategy remain correspondingly cautious. In calendar week 41, we sent no research signals. The late Friday move confirmed that caution. Without clean, reproducible setups, we do not activate. For CW42, we remain measured and data-driven. We cross signal thresholds only when clear criteria are met. Around sensitive releases, we throttle automation, reassess afterward, and avoid pro-cyclical chasing. On the risk side, we use smaller sizes, clear stops, and prefer BTC, XAR, ETH as long as the liquidity premium dominates. The goal is to capture asymmetric opportunities without letting headlines dictate portfolio risk. Conclusion: policy sets the framework, data sharpen the timing, and market structure demands discipline. The low fear and greed reading signals technical potential for counter moves, but event sensitivity is high and favors erratic swings. Elevated BTC dominance shows that breadth is not being rewarded. Quality, liquidity, and a strict risk framework matter more. We remain vigilant, test setups carefully, and activate only where the data context convinces. Legal notice: this text does not constitute investment advice or a recommendation to buy or sell financial instruments. It is provided solely for informational and educational purposes under financial market rules and MiCA provisions. Users make investment decisions independently and at their own risk. Quantum data analytics: analytical, strategic, innovative.